2020 was a surprisingly good year for the markets when you consider that the social world all fell about us. But of course, it was really all about what the governments and central banks were doing in order to support the markets. Where do we go as we go into 2021? John Meyer joins us now from SP Angel. John, good to talk to you. Thanks indeed for your time and Happy New Year to you. As we set out on a new year, I know one of the questions you're asking is whether or not we're going to be delivered some super cycle out of the response from COVID last year. The COVID response, of course, I said, was really more money coming through from the authorities. And of course, we are still in lockdown technically. So I want to put the question to you as to where we go from here for the markets.
I think this is the big question for investors is are we heading into a new super cycle driven by stimulus, driven by various economic policies out of China and the West, or are we going to head into some form of malaise, depression, recession? Are we going to have a sort of Japanese style lost decade? Now, there's all sorts of different ways of looking at this, and it's probably not entirely binary, as we might want to suggest. But I think policymakers are definitely not going to want to look down the barrel of a lost decade Japanese style. They're conscious that they shouldn't rack up too much national debt. But on the other hand, they are happy. They are happy and very willing to spend. And at the same time, we've got this economic competition going on with China at the moment. I don't want to go as far as to call it a Cold War, because it's not. It's more of a warm economic war. I think America and China need each other, and they need to trade with each other. And American companies have a lot of investment in China, which is why I don't think the two sides are ever going to really cut themselves off, despite the saber rattling that we had out of Trump. I'm quite sure that Joe Biden's going to have a much more diplomatic dialogue with the Chinese. But at the same time, we know that Democrat policies are not so far off what the Republicans were trying to achieve with China, which is basically, come on, we have to trade both ways, and you guys mustn't take the mickey out of us on this. So China has to realize it can't have its cake and eat it. It does have to stimulate domestic demand to buy its own goods and to buy goods from the Western world as well. And I think we are beginning to see that through its dual circulation strategy. And for example, I mean, the best thing to talk about here is examples. So Tesla has started its new factory in Shanghai, incredibly quick to build that and get it up and running. And already we're hearing anecdotal evidence of lots of orders for the new Model Y Tesla in China. In fact, they've discounted it, very punchy discount of 30% off the list price for deliveries after the Chinese Lunar New Year. So remember, we're heading into the Chinese New Year when they all tend to take a fairly lengthy break, at least for Chinese people. And normally there's quite a lot of buying through that period. I think this year things will be slightly restricted from a travel perspective, because we're all very conscious of the coronavirus. And although China has controlled it extraordinarily well, they are still conscious that they don't want to risk too much a resurgence of that. But at the same time, they are also very active stimulating domestic demand. They are stimulating a lot of construction at the moment. They've just started on yet another high-speed rail project to connect a new city hub just outside Beijing, which it's about 550 kilometers away. So a lot of money going into that. I think it was $34 billion. So, I mean, these guys spend on a scale that's so much bigger than we ever do.
And of course, you are right in saying that China is perhaps maybe a standout in terms of its economic performance recently. We've seen that in a lot of economic data. And of course, it's driven, as you say, by internal economics, where they're trying to push forward all these projects. But in fact, in the West here, we've got completely the opposite. We've got economies grinding to a halt because we're in now what is it, the third lockdown, certainly the second serious lockdown here in the UK. The US is having all sorts of problems in terms of an upsurge in COVID numbers. We're hearing about Germany, all-time high in terms of not just those that are contracting the disease and those that are out of the economic system because of it, but sadly because of the high numbers of deaths as well. Surely that's going to be a restrictive influence on the outlook for the economic performance this year.
Well, yes, it's restrictive, but it's restrictive in certain areas. So manufacturing has recovered incredibly well. If we look at the manufacturing PMIs, they're very good numbers coming out of pretty much every country in the world, very strong recovery. But the services sector is struggling. And when I say services, I'm really referring to retail and those sorts of related soft services, as I would call them. Other services, financial services, have recovered extraordinarily well, which is good to see. And of course, the performance of the stock market continues to be strong, which is great. That indicates that the stock market is a better place to put your money for now. And of course, there's a lot of change in the world. So we're seeing this big change driven by green policies towards generating more electricity from renewable energy and towards the move from diesel to electric vehicles.
Well, let's pick up on that point and talk a little bit about what we've been hearing today in the UK from the Society of Motor Manufacturers and Traders, the SMMT, highlighting the fact that it was pretty much a lost year for motor manufacturers. Certainly across the West last year, we've got some encouraging signs, according to the SMMT, about the fact that it says that the renewal of this sector is really now all going to be driven by what you just said is the new green attitude to the way in which we drive our cars. This is still very expensive, of course, you've got to say, and we don't have enough motor manufacturers around to satisfy the demand, certainly demand at the right price. How do you see this green evolution or revolution taking place? The SMMT reminds us that we just don't have enough battery manufacturers here in the UK, of course, to supply those electric cars that are being built by the likes of Nissan in Sunderland. How do we go about helping us through into that and giving us the opportunity to buy into this new era of transportation?
Yeah, it's interesting. We see the SMMT now expect electric vehicle sales to overtake diesel sales this year for 2021. We saw similar statements coming out of the Chinese Society for Motor Manufacturers. Again, they expect electric vehicles to overtake diesels as well. And so this is a very big structural shift. Yes, there are going to be some issues with battery supply, I suspect. There's something like, I think it's 178 new battery factories being built or in existence. Of those, 130 are in China and just 16 in Europe, of which only one is in the UK. Now, it's not necessarily going to be that hard to build a battery factory, and I think there'll be many more that come through. The thing is building the batteries properly so that they don't catch fire when you're driving around with them. And we've seen quite a lot of this in South Korea, where certain manufacturers who we won't name have had to have really quite rather large and expensive recalls of batteries made by LG Chem. So making the batteries more safer and better and with more capacity is critical. And in fact, if you're looking to make a personal choice about buying an electric vehicle, I would say, well, just hold on a bit, because we know from talking to the guys supplying the raw materials, we're talking about the graphite, the lithium, the nickel, all these products, mainly from talking to the graphite guys, because that's where the key, shall we say, advances, I think, are being made at the moment in with the battery chemistry. But the capacity of the batteries is improving, so you'll be able to get more range and better performance out of your battery and faster charging as well, partially through providing better raw materials for those batteries and better quality, consistent quality control, and partly through, so we say, some of the chemistry in the mix. So these batteries are definitely getting better, and I think they'll become more reliable and they'll give you better range. And I think that's critical, because as they give you more capacity, the reasons to buy an electric vehicle will increase and improve.
How does Brexit play into this? We don't have many motor plants here anymore, but one of the Europe's biggest is in Sunderland. How does Brexit play into this? And bearing in mind, we don't have that many battery manufacturers here at the moment. We are going to see bottlenecks, aren't we, at ports, presumably?
The great thing about the Brexit deal that was struck, which wasn't so good for the fishermen, I'm afraid, but was that manufacturers can import batteries for cars that can then be sold into Europe with no tariff, and that was a huge thing for the UK auto manufacturing industry. So Japanese manufacturers who are already here, such as Nissan in Sunderland, they will be making their own batteries in Sunderland in the one factory that is currently planned. Although I believe other factories are also being planned here as well. But they can import batteries from Japan, where they're very good at making reliable batteries. And then those cars can be exported all around Europe as well as bought in the UK.
Just remind us of the metals we should be looking at, and some of the companies are involved in trying to get the metals to market. From a mining perspective and from someone that trades the markets, what should I be looking at?
Well, certainly we would be advising investors look for anything in nickel and lithium. Now, there aren't so many companies in this area to invest in. I mean, BHP is big on nickel. First Quantum listed in Canada is quite big in nickel. Rio Tinto, I think, has some. There's Horizonte mining, and there will be other nickel producers, I think, coming to the market sometime soon. For lithium, you've got Savannah in Portugal, and I think there's going to be a lithium refinery built in Portugal at some stage, which will be critical for those guys. You've got Kodal Minerals in Mali, and then Iron Ridge, which has a lithium project in Ghana, not the Ivory Coast. So there's a rather limited number of companies that you can buy into for these materials. There's graphite as well. Again, it's a complicated space. Talga, which is listed in Australia, is doing very well and is a key player. And there are some other companies looking to develop graphite projects, but I think one's got to be a bit careful. You could look at Beowulf, for example, that has graphite exploration in Finland and will probably become a producer at some stage, in my view. So we are looking at a few of these, but it is not an easy place to invest in, purely because there just simply aren't enough of these projects to go round going forwards. And I think that's going to actually make these quite popular companies over 2001, 2002.
One final question, copper. We've spoken about it last year. I think right about mid-year last year, you were eyeing 10,000. We're at 8,000 now. We're on our way to your target. You did say then it was a long way off. Do you feel happier now about talking about 10,000 for copper?
Yeah, I in some respects, I sort of feel that copper's run too early, too fast. But yes, I do think we'll go through $10,000 a ton at some stage, and it could easily be this year, judging by the way the copper price is moving. If you think, as more and more people buy electric vehicles, firstly, those vehicles contain a lot more copper than conventional cars at the moment. But you're also going to have to cable in the charging stations, and they're going to have to boost the network infrastructure as well. I mean, we had a transformer blow up in our village overnight, so we are painfully aware of the problems when the grid goes down, and so there's going to have to be a lot more upgrading of local grid infrastructure. People are going to have the utilities are going to have to put in more local wind farms and solar farms in order to boost electricity generation, and I think. Yeah, that is going to require just a lot more copper. And let's not forget the rare earths as well, because those wind farms are going to require quite a lot of rare earths in the permanent magnets for the offshore turbines.
Okay, look, John, we'll leave it there, but thanks indeed for joining us. John Meyer from SP Angel talking to us there a little bit about his outlook for 2021. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.